Good evening. This is the post-market recap by AGI Era. Today is Monday, December 29th, 2025, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a lack of conviction as holiday-thin trading continues. The S&P 500 finished the day down 0.35%, settling at 69.5.74. Technically, the index managed to close just above the psychological 6,900 level, but it struggled to gain any real traction throughout the day. The Nasdaq 100 also saw weakness, closing 0.46% lower at 20,525.56. The Dow Jones Industrial Average finished down by 249 points. Crucially, trading volume today was lighter than average, which implies that this move lacks long-term conviction. We are in the heart of the holiday season, and many institutional desks are not fully staffed, leading to quieter, driftless markets. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 12.5. Despite the sell-off, the VIX remains subdued, suggesting this is a controlled rotation rather than outright panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into the defensive utilities sector, XLU, which was up 0.1%, while the technology sector, XLK, lagged significantly, down 0.45%. This rotation indicates that Wall Street is positioning for a more cautious stance, favoring safety over growth to close out the year. The macro engine room. The primary driver of today's moves can be traced back to the bond market and economic data. The 10-year Treasury yield settled at 4.35%, ticking higher on the day. This move is significant because it came in response to stronger than expected pending home sales data, which surged past forecasts. This creates a headwind for rate-sensitive growth stocks, as a resilient economy could mean the Federal Reserve feels less pressure to cut interest rates aggressively in the new year. Meanwhile, the U.S. dollar index is up slightly at 97.71, and crude oil is trading around $57.81 a barrel, climbing on geopolitical tensions. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. It was a broadly negative session for the group. NVIDIA finished the day down 1.21% at $188.22. Microsoft closed down 0.13%, while Apple managed a slight gain of 0.13%. The biggest loser in the group was Tesla, which dropped a significant 3.27% to close at $459.64. The weakness in this group is notable because it's happening on low volume. This isn't institutional selling, rather, it's a lack of buyers willing to step in and push these names higher as the year concludes. After hours and look ahead. Looking at the after hours tape right now, there are no major market-moving earnings reports. We are seeing some minor moves in smaller cap names, but the broad market is quiet. As we pivot to tomorrow, the calendar remains light. The main focus for investors will be positioning ahead of the New Year's holiday. Investors should specifically watch to see if the S&P 500 can hold the 6,900 level on continued low volume. A break below could invite selling pressure to start the new year. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.